Hey everybody, this is going to continue some of the conversation that I've had going around crypto mining. I think it's a particularly interesting business challenge because we're combining two markets that are fairly specialized and not necessarily intuitively obvious to operators or investors who haven't been deep into one or the other. And I've experienced this myself as someone who's trying to invest and trying to operate in the space. So I look at it to be a crypto miner. So I understand the value of Bitcoin, how it works, the different operational aspects of how I would mine. So the management of a mempool, UTXOs, which mining pool to operate in, how do I measure my returns, how to manage the machines, keep them cool and fix them and operate them, which ones to buy, all that kind of stuff. And that's not a simple business, but it's not a complex business. Pretty basic technology understanding, you can ramp into that pretty quickly. Oil and gas is a lot more complicated because it's got a lot more legacy. So there's lots more regulations, tax implications, different things like that. And tax implications are an interesting challenge on the crypto side as well. But the biggest challenge for a crypto miner is understanding how they're going to source the electricity to run their operation. And that sounds like, well, buying power should be easy. We all pay our power bills as residents and consumers. And typically that's not a huge undertaking, even from a business perspective. But when you're talking about industrial energy, it gets more complex. And when you're seeking industrial energy at the lowest possible price, you're going into some, fringe markets in terms of where is it and why is it priced that way. Because it was priced that way and readily accessible, you'd have smelting plants and large manufacturers, bakeries sitting on those energy. And so there's ways, those industrial players have to work to get those types of agreements in place and work with the utilities to do that. Typically on a crypto mining scale, we're smaller. We're trying to 20 megawatts is a reasonable sized operation. 100 megawatts is a large operation. So that's a big manufacturing plant. Pretty much, GM's got gigawatts of energy essentially that they consume across their manufacturing plants around the world, and they got experts who know how to negotiate the power purchase agreements. And so understanding power purchase agreements is a huge piece of the crypto mining business that's highly nuanced, kind of requires expertise and experience to do well. And then there's the on-the-ground realities of not just the power purchase agreement from a legal perspective, it's how do I get the energy into my machines, which good electrician, master electrician can figure that stuff out. But when you're playing with gas, it's what's the carbon tax implications of this? What are the different load balancing type things that are happening on the grid? So it's the energy environment's much more nuanced and complicated than the crypto environment, which is a little bit counterintuitive, but it is. So when you have investors looking at crypto mining, it's folks are typically, you got two interested parties that are in, like oil and gas industry, and investors are looking at, is this an interesting hedge on my oil and gas investments and assets? And then the crypto guys going like, well, we need the energy, and if I do the math that says Bitcoin mining is a good way to invest in Bitcoin versus outright buying the asset or buying software equities around the Bitcoin or other crypto networks, you kind of have to have two of those players at the table. You need to have someone in your operating model, and ideally as well in your governance model, aka investors or board members, hopefully both, that understand the oil and gas and understand the operating environment of how we're going to get, consume, and maintain a source of energy to run our operation and get the best possible deal out of our energy supplier and all the inputs that go with that. And then on the crypto side, investors and board members that understand the nuance of the cryptocurrency market, understand how do we get liquidity on our coins, how do we manage the treasury of coins, how do we ensure that we have the right security in place to not lose our coins, and those things are important as well. And then the operators kind of using the tension between those two parties to really, find the right answer of how do we buy this energy effectively, how do we use the energy effectively, and how do we manage the proceeds of running the operation correctly. And so that's an interesting thing. So I think it's getting those two parties to the table and getting one to lead is the kind of problem statement of the day, is like, who's got to go first, the energy investor or the crypto investor? And I think getting them into that conversation of, I'm willing to lead because I understand the crypto side, and I'm willing to lead because I understand the gas side, could unlock a lot of value in having that kind of partnership between a crypto investor and a oil and gas investor to drive a digital asset mining investment, because the two things are symbiotic. One cannot exist without the other. And so getting those two tables, I was just having a conversation with a partner around this, of get them eyeball to eyeball so they can understand each other's perspective on the marketplace. And ideally they co-lead, but one of them's got to go first. My kind of feeling is it's the oil and gas guys, because the most amount of nuance and the highest level of risk for those of us who've kind of educated ourselves on the nuance of the overall industry is the oil and gas side. Understanding how secure is the energy contract I have, how feasible, sustainable is the energy operation that I have around my mine, is actually much more difficult. Which doesn't make sense to the oil and gas guys or traditional business. Like, crypto market's really straightforward. And blockchains are simple, and very transparent and very code driven. So, there's a lot less, legal interpretation, tax interpretation, operational nuance, because the physical plant is predominantly going to be about converting gas into electricity. That's the vast majority of the operational work. After it's a bunch of plugs that go into a bunch of machines that spin and make crypto. Anyway, so I had some thoughts on the kind of continuing around this oil and gas Bitcoin arbitrage opportunity. I think it's looking at the investment dynamics of having that balanced team of oil and gas and crypto cooperating to generate an interesting return. And so if you want to learn more about that, there's opportunities in that space to explore. So love to chat with you, Mo. Thanks.